What's going on, everyone? Welcome to the January financial recap. My name is Shiraz Ahmed, and in today's video, we're going to be discussing some key developments in the financial world that can impact your investments. So let's dive right in. All right, first let's talk about the U.S. Federal Reserve. The Fed is expected to maintain its target rate for Fed funds at 5.25% to 5.5% at its upcoming meeting on January 31st. Now, that being said, there's about a 40% chance of a rate cut at the subsequent meeting in March. Fed Governor Christopher Waller believes that the current macroeconomic environment is favorable, with inflation close to 2% over the past 6 months and unemployment below 4%. He suggests that if inflation remains stable, the Fed may lower the federal funds rate in 2024, albeit not as rapidly as they have done in the past. Let's shift our focus over to the Bank of Canada. The Bank of Canada has decided to maintain its key overnight interest rate at 5%, marking the 4th consecutive time it's remained unchanged. This aligns with predictions as the last rate increase occurred in July of 2023. Governor Tiff Macklem emphasized that it's premature to discuss interest rate cuts despite concerns about decreasing inflation. Economists expect that the potential for a rate cut in June 2024, but timing must be carefully considered to avoid negatively impacting the overall economy. Now, moving on to the stock market, tech stocks have been leading the January rally, pushing the S&P 500 into record territory. However, analysts at Jefferies believe that the tech market leading performance in January is unlikely to continue into February. Jefferies suggests that historically tech and traditionally defensive sectors tend to underperform in February, while core cyclicals tend to perform well. This change in leadership may be on the horizon as earnings season continues. Now, in the real estate world, the housing market in the United States saw an 8% increase in new home sales in December, surpassing economists' expectations. This uptake is attributed to a drop in mortgage rates, marking the first annual increase in new home sales in 3 years. So despite this increase, experts caution that the data may be volatile, and it's important to really consider various economic factors. In the Toronto real estate market, there are signs of increased activity in January. Prices had softened in the fall, but sellers are becoming more willing to work with offers, and some buyers are making moves amid optimism for 2024. That being said, experts warn last year's market challenges may still influence the housing market here in 2024. Now, lastly, let's talk a little bit about gold. In January 2023 proved to be a wise move due to high inflation and elevated interest rates. In January 2024, there's some compelling reasons to consider a gold investment. Inflation remains a concern, with December's rate at 3.4%, making gold a valuable hedge, and diversifying with gold can provide some stability in uncertain times. Wrapping things up, gold prices edged higher recently, with investors closely watching US economic data and the European Central Bank policy decision. So that's going to wrap up our January financial recap. Remember to stay informed, diversify your investments, and consult with your financial advisor or financial professional for really personalized guidance. I want to thank you for watching, and we'll see you next time. Until then, stay safe out there. Bye for now.